Hi, good morning, good evening, good afternoon, everyone, wherever you guys are at from your part of the world, right? I'm based over here in Singapore. So right now it's late afternoon, right? So I guess still a good afternoon to all of you, right? Before I begin, just want to be sure that you guys can hear me loud and clear and you guys can see the slides, okay? Not so important that you can see my face, right? But more important that you can see the slides. Okay, so if you can, just let me know. All right, so hi Travis, can you hear me? Right, glad to be back. Good to see a familiar name, always. Right, so you guys should be able to hear me loud and clear and also see my screen. Okay, thanks a lot, Travis. So without further ado, won't take up too much of your time. Right, I just want to go through a very quick and short disclaimer. Understand that the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. Now, while FP Markets has made every effort to ensure the accuracy of the information at date of publication, it does not give any warranty to or representation to the accuracy and reliability or completeness of the information contained in this presentation. But it is my due diligence as the presenter to ensure that whatever I share with you guys is correct at time of publication, all right, at time of this presentation. So very quickly, this will be the agenda for today, right? What I really like to do, okay, is to give a broad-based market overview. Okay, I want to pick out the top headlines, what I think are really attractive headlines that you guys might be interested in. More importantly, also what I think are the top headlines that would actually be market moving, right? So those are pretty important things that we want to look at. After which we will actually move on to the risk sentiment portion. Okay, so for those of you who have been around, all right, Travis, I'm sorry, you're gonna have to bear with me here. Okay, risk sentiment, I like to liken it to the fact that, you know, it's like driving along the expressway, and risk sentiment is the warning signs that you see along the highway. Okay, so it's possible to move from point A to B, get to your destination. However, you don't want to miss out the warning signs along the way, right? It's really important to know whether there are animal crossings ahead, whether, you know, there's a cliff ahead, whether it's a bend ahead, whether there's a steep incline or decline ahead. Okay, so I want to take a look at risk sentiment by looking across different asset classes, so we get a feel of what's going to happen upcoming week. All right, and then after that, I'll move very quickly into the best place for the day or the week ahead, right? What I think are the best market setups. Okay, and then of course I'll end it all with a nice short summary. Okay, along the way during this presentation, if you guys have any questions at all, feel free to fire away your questions. All right, if there's no Q&A at the end of the webinar, of the presentation, so what I'll do is I'll just answer your questions along the way. If there are questions of the multiple nature, similar multiple nature, multiple questions of similar nature, sorry, okay, then I will group them together and I would actually reply you guys at the right time. All right, so with that, let's move over to the headlines for the day. Okay, hang on, I see somebody raising a hand. Yeah, I'm not sure who's actually raising the hand. Okay, so Mark, you have a question, right? If you have a question, just feel free to fire away. All right, no need to raise the hand, okay? Because it just means that I have to take extra time to go to the attendees pane and to see who raised their hands. Okay, so let's move on very quickly. Top stories of the day. Give me a moment, just let me pull out. Okay, so at the start of the trading session today, right, we see the S&P 500 futures actually holding mode, right? Trading sideways within a broad range along with stocks in Europe on Tuesday, right? So really ranging indices as traders awaiting key American inflation data and second quarter earnings. Okay, so if you guys do not already know, we are into a new season, all right? It's the earnings season over in the US, and really the earnings seasons is really being kicked off by some of the world's biggest bank. So treasuries and the US dollar actually held steady. All right, so contracts, as I mentioned earlier, contracts on the S&P E-mini futures edged lower during pre-market, and those on NASDAQ 100 were trading sideways, all right, after the underlying indexes close at records high again, right? So we have JP Morgan and Goldman Sachs Group reporting their earnings, okay, their new quarter earnings later today, along with PepsiCo. So this will give traders an inkling as to how to gauge, how to better position themselves, and whether extreme valuations in the market right now, right, since we are always making all-time highs, whether this extreme valuations is really underpinned by real profit growth. Okay, so if it's going to come out empty, going to come out hollow, right, be prepared to see quite a significant pullback on the global market indices. Over in Europe, healthcare stocks led a modest decline in the stocks Europe 600 index, okay? And banks gain over in the UK, right, led by UK lenders including HSBC, Barclays, and NatWest Group after Bank of England removed restrictions on dividends, right? So they actually removed restrictions on the amount of dividends that bank could pay out. Okay, so over here you actually see a chart, right? Is the MSCI, okay, gauge, right, of the S&P Information Technology Index. So it's the price to sales ratio. Okay, very interestingly, this is a very long-term kind of thing. Just to give you guys a slight comparison. All right, we have valuations. Okay, over here, let me just try to bring out my pen tool. Let's choose a nice color. Okay, so pink. All right, so 1995 to 1999, just before the dot-com crash, okay, we see valuations in the S&P IT index really just pushing higher and climbing higher. All right, no stopping it. And then of course at the start of 2000, right, we had this dot-com bubble crash. Okay, and then after that we see the S&P IT index actually drop. Now, over a long couple of decades, right, 10 years, okay, the index actually traded sideways, only to really start picking up again when we start seeing the likes of, you know, Apple, the likes of Facebook coming in, pushing the index higher and higher. And at the start of the coronavirus crisis, if you guys would actually remember, last year in 2020, slightly more than a year ago, right, when multiple economies across the world were going to shut down, okay, businesses had to communicate with each other, whether it was B2C or C2C, right? It was really always through Skype, okay, through things like Microsoft Teams, okay. But what's interesting was that, you know, the growth was really led by IT, right? The growth in the S&P index was really led by the Nasdaq pushing higher. You have Zoom Technologies coming in, right? And all these IT stocks started to go higher, push higher. And that was the very strong push up the valuation that we are currently seeing. So what economists are saying is that, you know, well, the economists always say that, you know, they look at charts and then after that they go off and mock technical analysts to say that, oh, TA doesn't work, is really a sort of a hogwash sort of thing. Okay, that aside, right? Economists are actually saying that, you know, they're starting to see that this rally here, okay, is echoing the dot-com era in the current tech sector. So whether you believe it or not, okay, we are the multiple now is of 7. Okay, so valuations are very high. Okay, so it may or may not be overvalued. That is something that we have to, that is why our traders are actually keeping their eyes out on the earnings season right now. Okay, so Maria, I see your request on dollar ZAR, so I will take a look at it later. Very exotic pair. And Bartholomew, right, thanks for joining me once again. I hope you're well. Good day to you as well. Okay, so expectations for a solid earnings season is really supporting the stock rally as investors ponder how central banks are going to start to unwind the support for driving the recovery from the pandemic. Actually, if you really think about it, right, central banks have actually been supporting the economies since the global financial crisis back in 2008. All right, that was really when we started printing, the US Federal Reserve started printing money, followed by the Eurozone, ECB starting to print money, quantitative easing, right, over the last decade. Okay, so it's not really recent, right? The central banks have actually been printing money for more than a decade now. And really, with such high valuations, there will always be fear. People are starting to see, you know, how a central bank will react. Okay, So inflationary pressures, while Jerome Powell and his team has always been saying that it's really transitory, right? The inflationary pressures still remain a big concern, as so the spread of the Delta variant and a slowdown in vaccination rates across the world. Okay, so that's just something for you guys to take note of. Okay, Bartholomew, yes, I note your request on the cable as well. I will take a look at it later. Okay, so elsewhere, oil rose for the third time in 4 days as traders grappled with the demand implications of COVID-19 resurgence in several economies around the world and a slowing economic growth in China. So I will be covering that a bit later. Okay. So Maria, you're asking what do I mean by the multiples on the y-axis? So the multiple here is really the price to sales ratio, right? So when it says, for example, right now we 7 times, okay? So we're saying that right now the sales that these tech firms are actually making, right, compared to the stock prices, okay? Right now the stock price is 7 times the reported earnings of the company. Okay, so what you're essentially saying is that, you know, the value is way too high compared to what the company is earning, right? So you're saying that this is the earning potential right now. However, the company is valued 7 times more than their current earning potential. All right, so Maria, I hope that clarifies your question. Hope that answers your question. Okay. All right, so with that, let's move over to the next. I'm just going to erase all drawing. Let's move over to the next chart. And the next chart over here, we see, okay, the S&P 500 streak that I've taken from Bloomberg, right? This is really the price trend gauge. Okay, what it really measures, you can see over here in the axis. Okay, let me just bring out the pen tool again. You can see over here in the axis is a percentage. Above 0, positive, below 0, very simply negative, right? So what this really means, okay, is really from the start of 2020 to where we are currently at, is a year to date. Okay, so this measures, the line here measures the gap, the percentage gap between the S&P 500 closing price against the 200-day moving average. Okay, so you can see very clearly that, you know, at the start of 2020, all right, the S&P was above the 200 moving average, and over here roughly at this point when, you know, we had give me a moment because I don't really want my speaker to keep ringing, right? I'm actually linked to my family WhatsApp chat, so they're always pinging each other. Okay, so back to this chart, right? At this point over here, just slightly before March, when the coronavirus really exploded, okay, there was so much fear that the markets will not be doing well. Huge sell-off over in the S&P, right? And we see the markets tanking, S&P breaking below a 200 moving average, and at one point in time, okay, it went to about negative 27% away below the 200-day moving average. Okay, so bear markets definitely, and very quickly there was a strong V-shaped recovery. All right, some people say V-shape, others say it was a Nike swoosh recovery. So really up to you how you want to look at it. At the end of the day, recovery, still a recovery, right? And there was a strong recovery. S&P went back above the 200-day moving average. However, sometime towards the end of the year, okay, we sort of see the growth slowing down, right? Still bullish momentum in the S&P, but very slow growth. Okay, this, even though the new Biden administration took over, even though there was a new rollout of vaccinations, right, the percentage of the S&P away from the 200-day moving average was very much in a steady state, holding above 10%. So you know that the S&P, even though it was drifting higher, there wasn't really much of a big move on the S&P. All right, so it faces a historical challenge, right? You want to see the S&P push higher, right? It really depends on how the earnings season will go right now. Okay, so at the end of the day, if you are sort of the investor that does dollar cost averaging, okay, it's really going to be hard for you to average into your position, right? Because stock market valuations are just climbing higher and higher. Again, all eyes are fixed on the earnings season that will be coming out over the next couple of weeks. So I had to do a bit of digging, right? You have over here CNBC sharing this chart from FactSet as of July 9th. So we're looking at the year-to-date returns of really the S&P, the equity indices, and we see that over the current year, right, from the start of January 2021, the S&P has been strongly outperforming above 16% returns. Okay, if you think that is interesting, which I'll show you guys the next slide. Right, so we have the S&P really generating outsized returns, no matter how you say, you want to be bearish. Okay, fact of the matter is, if you're a long-term investor, throwing money over into the ETFs, throwing money into the index funds every now and then, your portfolio will be up slightly more than 16%, especially if it's in an S&P, right? Of course, a lot of this growth was really led by the Nasdaq. Okay, so sometime in towards the end of February, right, even though you had the S&P going higher, you see the Nasdaq actually dropping below, right? This was really when Apple price and Facebook price was really taking a hit. I'm not sure if you guys remember that. That was at the start of the year, right? But after that, it has been a steady state increase. All right, so this is really just a quick overview of how the US markets is doing. Now, contrast that over to the Asian side of things. Okay, so it's very hard to actually look for this Asian data. Okay, okay, Bartholomew, you're actually asking what is the right E-mini to use now to check the S&P with regards to market sentiment. Okay, when I'm looking at TradingView, right, the code is ES1 exclamation mark. Okay, this is the current contract in front. The thing to know about futures is that there's this thing called the futures market rollover, the contract rollover period, and it's a bit tricky because it's quite hard to actually get the real life open interest of the futures, right? So even though the rollover date, even though, for example, maybe there's a rollover date, say in October, right? Generally speaking, traders, institutions will not hold their futures contract, their outstanding futures contract all the way to October. What they tend to do is maybe by September or towards the end of August, they start doing the contract rollover to the next one, to the December contract. And then you start seeing that the December contract is trading more actively than the current contract, which is the October contract. Okay, so this rollover is actually pretty confusing, right? But to try not to miss out as much of the move, all right, I would advise you to just use the current contract being in front. Okay, unless you can get your hands on open interest, live open interest data, right? The moment the future contract, the subsequent contract has a higher open interest than the current contract, right? You should always be looking at the current contract. Okay, so Bartholomew, I hope that answers your question. All right, so back to this chart. Okay, I covered the S&P index. Okay, for those of you who are actually holding emerging markets in your portfolio, this is really the Asian stock market's performance. I actually had to dig this out from Refinitiv data stream. Right, so on the left hand side you have the column for the year-to-date performance, right, and then on the right hand side you have the month-to-date. Okay, so really for the year-to-date, the countries that are doing the best, right, will really be Vietnam. Okay, the Ho Chi Minh stock index followed by the Taiwan stock index, right? And then of course Australia placed third, followed by over here Singapore, right? So Vietnam is a bit interesting, okay, because you really have outsized growth, right? The growth is actually nearing 25% returns. That is compared to the S&P, which I just showed you guys, a steady state growth of 16% returns, right? So if you guys were actually investing in emerging markets, right, it's always something good to look at. It's always something that is interesting you want to have in your portfolio. Okay, Taiwan being second is not a surprise, right? Ever since we were emerging out of the coronavirus shadows, okay, there has been a boom for semiconductors, right? Because of the boom in tech, right? Because of the boom in graphics card, and the coronavirus sort of put supply chain into a huge nightmare. Okay, so a lot of countries in the world, a lot of domestic manufacturers were actually having issues, okay, with securing chips, right? And Taiwan being the semiconductor or chip manufacturer of the world, okay, of course they were trying to produce over time, all right, and that led to a lot of their stock valuation to push higher. And not to forget, Taiwan was also one of the countries that really very early on managed to rein in the spread of the coronavirus very well, right? So no surprise there, Taiwan being one of the outperformers, one of the strongest outperformers over in the Asian market. Okay, so we're looking at a month to date, nothing too interesting. You just have Indonesia and Pakistan stock exchange outperforming the rest of Asia. Okay, Hong Kong doing the worst. Again, not a surprise because you know, during the, if you guys remember, couple of weeks ago during the 100th CCP 100th anniversary, right? The CCP's 100th anniversary, President Xi Jinping was actually you know, saying that it was a very good and very fast and swift response to the dissenters in Hong Kong, right? And then Apple Daily was shut down, right? The Hong Kong stock market took a very huge hit, okay, coupled with Chinese firms getting their IPO whacked left, right, center. Okay, so you see the Hong Kong Stock Exchange underperforming, but I still believe there's always good opportunities to look at such underperformers. All right, so with that, I just want to move over to the next news. Since I ended with the Chinese, just want to point out to the Chinese news. If you guys actually follow the Shenzhen Stock Exchange or the CSI 300, right, China's V-shaped economic rebound from the COVID-19 pandemic is actually slowing, sending a warning to the rest of the world how durable their own recoveries will prove to be. Now, this is a bit interesting because China was really the first to sort of dive head into the heat of the coronavirus, and they were the sort of the first country to really emerge, which is why a lot of the world is actually looking at how China's domestic economy is recovering to get an inkling as to how their own domestic economy would recover when they come out of the virus. Okay, the changing outlook was underscored last Friday when the PBOC, that's the People's Bank of China, actually cut the amount, the reserve ratio, okay, of cash that most banks must hold in order to boost lending. So the PBOC has actually said that this move is not a stimulus push. It is really just to sort of prop up the market. However, this breadth of 50 basis point cut to most banks' reserve ratio requirement came as a surprise to the markets. Okay, so data on Thursday, okay, later this week on Thursday, is expected to show growth easing into the second quarter to 8% from the gain of 18.3% in the first quarter. So you have slightly more than 10% drop, all right, in growth, according to a poll done by Bloomberg, right, when they interviewed their economists. So over here, okay, China's slowing recovery also reinforces the view that factory inflation has likely peaked and commodity prices could moderate further. Okay, so this is very interesting over here again from Bloomberg, right? We're looking at the PPI, okay, and CPI. So very interesting, two economic indicators that really looks at the health of the overall country's economy, the country's growth. So the PPI really looks at manufacturing side of things, right? How much they are actually manufacturing, what the producers are actually paying for their goods, this sort of thing. Okay, and then of course the CPI on the other hand is how much consumers are starting to pay. All right, so we see that the CPI, okay, over 2020 over here, let me just change the color. Over here is sort of taking a hit, right, over the course of 2020 because of the coronavirus, a lot of lockdowns, people are hardly spending, CPI is falling. However, in 2021, right, we dipped slightly below zero and we are starting to climb back up again. So there is very, and then more recently, you start to see the gradient of the CPI going lower, right? So there's very slow growth on the CPI, right? So consumers are a bit more apprehensive, not really being willing to spend, not being really willing to throw money in their domestic economy, right? Multiple reasons, but end of the day, the CPI is telling us that, you know, people are not spending. All right, people are not spending, and generally when people do not spend, it really leads to two things. It just means that either one, they're not earning enough, two, the economy is very, very shaky. People rather save and keep for rainy day as compared to spending the money. All right, so that's the CPI, right? Really flat, it's like starting to dip lower. On the other hand, the PPI really shows how much the producers are paying for their goods, right? So we see that since 2017, there has been a downtrend, right? A very slow decline on PPI. Okay, if you guys actually remember looking a couple of years back, this was really when, you know, China started gaining prominence, and there were really a lot of talks in the market that, you know, hey, China is no more the factory of the world. People are starting to look at Ho Chi Minh, People are starting to look at Myanmar as sort of places to run their new factories. China is moving more towards a consumerism market rather than a production market, which is why you see the PPI declining, right? However, towards the end of 2020, when the economy was kick-started, right, you see the PPI climb very quickly, but more recently, you're starting to see the PPI go flat, right? So this recent flatness of the PPI, right, the recent flattening of the PPI and the CPI is actually sort of giving a warning sign to the rest of the world that, you know, this inflation has likely peaked, and the growth slowdown could mean a near-term disinflation pressure globally, particularly on industrial goods over here, as shown by the PPI, and capital goods. All right. So a review done by some Bloomberg economists have actually said that, you know, looking through all this data, they are saying that the recovery is maturing, not stumbling. Okay, and activity and trade data for June, the following month, will actually likely paint a similar picture, a slower but still solid expansion. If you ask me, okay, you can say it's maturing, it's not stumbling. You can say whatever it is. At the end of the day, looking at the bottom line, for me, is slowing down, right? It's slowing down. Whether it's maturing, not stumbling, it's slowing down. So this is just something that we still have to be a bit more cautious, right? Especially with all the recent IPO kits done by China, the Chinese regulatory body, against their biggest tech firms. Okay, so that is the story coming out from China. Very quickly, guys, I don't want to waste too much time on the headlines, but really the focus right now is on equities. Okay, and over here, as you guys would know, this is the oil volatility index, right? I don't have to talk too much about the oil story. You guys would know that, you know, there's a huge argument within OPEC, and in OPEC, the huge argument is really between Saudi and the UAE, right? And yesterday there was actually a data on coming out from the IEA on the US side, saying that, you know, they warned that we should expect to see a much tighter oil market unless OPEC comes together to boost the supply. So global oil markets are set to tighten significantly unless the OPEC alliance resolves its standoff and agrees to increase production, the IEA warned yesterday, right? So it's really a deadlock between Saudi Arabia and UAE, and because of this deadlock, the talks are not able to resume. Okay, OPEC will still keep to its production levels, assuming that none of the countries go renegade and decide to go increase supply on their own. Okay, so if they are not going to get their act together anytime soon, the potential for high fuel prices to stoke inflation and damage a fragile economic recovery could very well happen. So we're starting to see volatility, fear coming back into the oil market, and we're starting to see Brent crude oil push back towards the 75 region again. Okay, so IEA report has said, you know, and I quote, that the standoff comes at a particularly inopportune moment. The oil inventory glut, all right, that amassed during a pandemic has cleared, right? So over summer and recovering demand into the oil market, we are seeing the stockpiles dwindle, and stocks are now below average levels. And world demand is set to rebound by a vigorous 5.4 million barrels a day from the unprecedented slump seen in 2020. So as long as OPEC doesn't increase their output, right, if they come back together to agree to their initial level of 400,000 barrels a day all the way to the end of 2022, right, the oil supply will never be able to keep up with oil demand, and we might see oil prices go a lot higher. Okay, so I have a question from Bartholomew over here. So what is the correlation between the Canadian and WTI? Okay, so Canadian loonie is traditionally known as the oil currency, right? Because Canada also has it also produces a lot of oil along with the US, right? And on that side of the world, right, the two biggest oil producers is really Canada and the US. And so when oil prices rise, right, okay, it's generally two things, right? When oil prices rise, oil is generally denominated in the US dollar. First factor is that, you know, it could mean that the US dollar is weakening. And when the US dollar weakens, okay, the Canadian loonie tends to strengthen against the US dollar. So when oil price rise, when dollar weakens, okay, oil prices will rise, commodities price in dollar will strengthen, and the Canadian loonie will also strengthen. So they are positively correlated. So that's the first factor. The second factor is because Canada is actually one of the world's biggest oil producer, right, on that side of the planet. Okay, so when oil prices are going higher, Canada is actually selling more oil. Okay, their value of the Canadian loonie, right, is actually increasing. Okay, they don't sell oil in Canadian dollars, right? They actually sell oil based on US dollars. And because of that, they convert the Canadian dollar to the US dollar. The Canadian loonie actually strengthens. Okay, so correlation. Okay, I'm sorry, Bartholomew, I went a bit off tangent because I just really want to understand, let you guys understand the fundamentals behind it. But at the end of the day, correlation is positive. All right, the correlation between the Canadian loonie and oil is positive. All right, hope that answers your question. Okay, so back to the topic over here, right? Like I said, even if OPEC comes to a resolution sometime soon, if they are still keeping to $400,000, 400,000 barrels a day, right, it's still not going to be enough to meet the increasing demand that the oil that people are actually, the analysts are actually projecting in the oil market. Okay, so with that, I just really want to take a look at the 1 week relative performance of the G8 currencies. Okay, over this week. So far, I mean, the week just started, right? But really, there's a lot of apprehension going into a week because, you know, the S&P is sort of trading sideways. So you see that, you know, the dollar, okay, is really outperforming all the other G8 currencies right now. Okay, even safe havens, right? Even safe havens such as the franc. Okay, I'm going to change the color again. Even safe havens such as the Swiss franc and the Japanese yen, right, is underperforming against the other currencies. Okay, so euro and pound, right, no surprise. Okay, a lot of people, some of my friends were like, oh, you know, the pound is actually depreciating because people are really upset that England didn't bring home the trophy, right? So it's sad, okay, and it's also sad how the aftermath, the racial attacks on the players turn out, right? Over here in Singapore, very multiracial country, so racial harmony is something that is very sensitive, yet it's something that is very, very important to us and the people of Singapore, right? So when we see racial attacks across the world, right, firstly, it's a bit hard for us to understand. Not saying that we don't have any racial attacks here, right, but it's rare, far and few between, but we always like to see a bit more harmonious mingling interracially. Okay, so of course the pound underperforming, and then of course you have Delta virus resurging over in the UK, so that's not exactly very good. Pound underperforming, not a surprise there. Okay, the dollar is the one to look out for now because of the stock index story, right? The indices story that we're actually focusing on. Okay, so the week has just started. All right, these numbers are bound to change as we progress through the week. Very quickly, what I really want to do now is actually to move into looking at the different asset classes and to identify the risk sentiment. Okay, wow, okay, so the headline story took a bit of time. Okay, I don't really like to do headline story because I have to spend a lot of time preparing all this headline story, and then at the same time it makes me deviate away from really looking at charts, which is something that I really enjoy. Okay, but nonetheless, still have to give you guys the additional value add. Okay, so let's just dive right into the charts. What I really want to look out for now, what are the 4 asset classes that I really want to look at now is the S&P futures, okay, which is pre-market. So I want to know how the S&P is roughly going to open. And then I like to look at the US 10-year yields, okay, which is the treasury, okay, which really tells us whether people are fearful or not, right, whether there's a capital flight or not. And then I'll look at the dollar index to look at the strength of the dollar, okay, and then I will look at the VIX. All right, so for those of you who have been with me many times, okay, this is really a habit, this is really a discipline, and I hope to be able to build that for you guys as well. Okay, so with that, without wasting much time, let's just dive right into the charts and let's look at the ES first. Okay, so over here, definitely I've gotten my last week my last week analysis wrong, but it is what it is. It's wrong. We move forward. All right. Admit it's my mistake. Okay. When we do an analysis, it's you know, there's nobody else. It's just you and the markets. So if there's a mistake, there's a mistake. Okay. So Praveen, you're actually asking a question. For trading perspective, do we need to look at daily, weekly currency strength? Very interesting. All right. And I'm going to do what I like to do best, is to ask you back another question, right? When you're trading, what is your time frame? What is your style as a trader? Okay, you can only really answer such questions, or rather I can only answer such questions if I know your trading style. So let me know, all right, whether you are scalper, whether you are intraday, whether you are swing trader, whether you are position trader, whether you are long-term investor, all right, or whether you know you are trust fund baby. Okay, if you're a trust fund baby, you don't need a trading perspective. Okay, you can just go to the casinos. All right. Okay, so it's just a joke, no offense taken. All right, so okay, so you normally do swing and intraday trades. Fantastic. So a bit like me, right? Then generally speaking, I like to look at the daily and the weekly chart. All right, to look at currency strength. Okay, because you want to know the slightly longer term trend. All right, so back to the ES over the E-mini right now. Okay, just looking at this chart, I immediately know where I have gone wrong. All right. I always like to get it wrong, okay? Not because you know, how do I put this? Not because I'm a sucker for pain, right? As an analyst, my role, right, when I'm facing all of you and I'm calling out analysis, doing on the spot analysis, it's always good to get it right, because when I get it right, my credibility increases. But when I get it wrong, you know, I always have that fear. People out there like, you know, this Isaac, what sort of analyst is he? You know, always getting his calls wrong. Okay, but I absorb that. I take it as an analyst, as part of my job, right? When I get it wrong, it just gives me an opportunity to learn, and when I learn, I get better. Okay, so just looking at a 1 hour chart over here, over at the ES, I straight away immediately know that, you know, this could be Elliott wave 1, 2, 3, 4, and we're doing wave 5 short term. Secondly, why price didn't really pull back lower is very simply because, right, we are playing against a bigger time frame, right? We are playing against a bigger time frame. And what is the bigger time frame, right? I have always told you guys that the discipline here is always to start off with the biggest time frame and then move down to the lower time frame. You don't want to miss the forest for the trees. Over here on the weekly in close, you can see that price has actually done sort of a breakout, right? Price has actually done sort of a breakout. It is really a bullish momentum sort of thing, right? I'm just going to draw something like that. Okay, S&P always likes to do its opening pattern, right? So a very strong breakout, nothing much to cry about. This long time frame, I know I'm wrong. Okay, trading against the trend is always risky. This is why we always look at the bigger picture. Okay, so weekly still bullish, momentum still very bullish. All right, you can just use the momentum picture. Okay, just let me just see my momentum picture. Okay, so you have the momentum right here. Okay, no real divergence coming up from MACD. MACD is pretty flat. All right, and we're holding above the moving averages. Okay, even on the daily, right, you can see a breakout actually retested this breakout line and push higher, right? So MACD, we are also still pushing higher. No difference right here, guys. Okay, so the stock market is still very bullish, okay, in terms of momentum, and I'm expecting it to still be bullish, okay, despite what the news called it earlier on fundamentals, that, you know, S&P trading within a broad range. Okay, look at that, we are still bullish, and in fact there is a breakout right here. Okay, breakout, retest, all right, and push over, and look at that, we also have a golden cross on the moving average just recently, right? So bullish on the ES. Very quickly, let's move over to the US 10-year yields. Okay, so US 10-year yields, if you guys remember, right, I was the previous picture that I painted to you guys, right? I had something like this. I was saying that, oh, you know, we are holding in a downtrend, okay, and I'm seeing, you know, the target to at least reach the negative 27.20. right, over here at the 1.29 level, and the inflation rate actually did drop, right, retested at the 78 level and really did drop at the 1.28 1.29 level before bouncing. Okay, so starting off with the monthly, I'm just going to clear everything. Okay, on the monthly, we are seeing the inflation, the interest rate actually dipped lower. Okay, so slightly bearish. We also crossed below the moving averages already, right? On the daily, we are below the moving average. No issues here. No divergence on the MACD in a strong downtrend. If anything, this is what I'm seeing. Price could push up over here and then push lower. All right, so moving, so US 10-year yields bearish. Okay, US 10-year yields bearish, and stock index going higher. Okay, so very quickly, let's go over to the dollar index. Okay, I want to leave some time for the charts. Okay, so dollar index is a bit mixed for me. It's actually still holding below this long-term daily descending trend line resistance. Okay, so right now the dollar index is very mixed. Okay, we are pushing higher, right, but we are still kept below this trend line resistance. Now for me, okay, a break above the trend line resistance will see the DXY push to the last swing high over here, right? So a break above the trend line will see a DXY push higher. Otherwise, a break below, which is also a 23.6 retracement at a 92 level, will see the dollar index drop lower. However, we are still above the daily moving averages, so the bias is still for further bullish push higher. All right, so dollar is a bit mixed. All right, dollar is a bit mixed, so slight bullish bias with a 1-star bullish. Okay, so Maria, you're asking what software do I use for my charts? Okay, so this is TradingView software, right? Very accessible for anyone. What I actually do is I actually do my analysis on TradingView, and then after that I input my trades on MT4, right? So if I'm using FP, okay, I'll input my trades on FP's MT4 or MT5 platform. Very stable. I prefer the MT4 compared to the MT5. So the MT4 is very stable, right? And FP has pretty good spreads. All right, so that's one thing that I like about FP as a broker. Okay, so just remember, all right, analysis on TradingView, input your trades onto MT4. It really would be awesome if FP could actually move onto TradingView as well, like some sort of integration, and that would really be the best, right? But one can only dream, right? Maybe I should feedback to the FP team. Okay, so anyway, yeah, dollar is really mixed, but leaning more towards the bullish bias. Okay, which is why earlier on in the Finviz chart, you can see the dollar really outperforming all the other currencies. And very quickly, finally, let's go over the VIX. Okay, VIX, let's watch it in close, remove all indicators. Now, the VIX is really low. It's testing the same low as it did back before the virus actually broke out, right? Slightly more than a year ago. So we're not seeing volatility coming into the stock markets. We're not seeing a lot of fear coming into the stock markets. Valuations of stock market is going higher, right? If the earnings seasons, okay, so technicals are pointing to a very bullish stock market still. If the earnings seasons are going, the reports are going to show that all these companies are doing very well, all right, and are profitable, right? We will see the stock market push higher. Okay, so the whole thing about that earlier chart that I showed you about multiples may just go out the window. All right, the markets now is a very bad time for value investors, because if you're talking about value investing and you're looking at a price, the price to earning ratio, okay, or price to sales ratio, and the multiple is 7 times, right? How are you going to properly value an overvalued company, right? So the idea of value investing is to look for undervalued stocks, buy into them, and then hopefully they reach their intrinsic value, right? They appreciate over time and reach their intrinsic value. Okay. However, with everything overvalued, right, you never really know what is the best. The analogy that I can give you guys is, for example, if I like superheroes, right? So you have two very powerful heroes fighting against each other. So an example will be, let's say, Superman against Thor, right? Both are equally powerful at the peak of their power. How do you know which is more powerful, right? You won't really know, right? You can always argue till the cows come home, but at the end of the day, both are overly powerful. There's no benchmark that you can value them with. It's pointless to take part in that sort of argument. Likewise, right now, it's really pretty much tough to take part in value investing. Even earlier this year, Berkshire Hathaway's Charlie Munger actually said, he kind of regretted selling off the airline stocks, and airline stocks sort of increased drastically after the coronavirus pandemic, right? So value investors, tough time, right? I can identify with that. Okay, so to put all the picture together, I really want to leave some time. Okay, let me just, let me just change. Okay, so this was a previous one. I don't really want to let you guys have a bias. Okay, so S&P, we're still bullish. All right, dollar index, sorry, the 10-year yields bearish. Oh, what word is that? Okay, dollar index, okay, we are mixed. Okay, still with a slight bullish bias. So it's 1 star. Okay, and VIX, right, is really flat. No fear. All right, guys, no fear, right? You can just go all in. Okay, so won't waste your time, right? Risk sentiment for the week ahead, what I see is bullish. Okay, risk sentiment for the week ahead for me is bullish. Okay, so if you guys are going to go into the stock market, okay, you can rest assured that generally speaking, being more bullish the probability of being bullish will be more than the probability of being bearish. Okay, so again, risk sentiment is sort of just a warning, right? It's just that warning sign to let you know what's up ahead. That's about it. Okay, it is not the be all and all. All right, don't take this as like a godlike signal kind of thing and the holy grail to say, okay, Isaac says risk sentiment is bullish, let's go, man, all in. All right, don't do that. Okay, so with that, I want to leave the next 10 minutes or so to look at charts. Okay, Bartholomew, you're asking what are the moving averages that I use in my chart. Okay, so straight off, I'm using 21 and 13. All right, 21 and 13, those are Fibonacci numbers. Okay, why use 21 and 13? Okay, very simply, Fibonacci numbers are fractal in nature, which is why if you use 21 and 13, you can cycle through the time frames, and the fractal nature will be there to sort of keep that momentum, the overview momentum picture strong, right? That is my argument, my point of view. Okay, some people like to calculate. Okay, if I were to look at maybe one whole trading year, they will look at maybe 250 or 200 moving average, and then after that, they want to look at 1 month. They want to look at so that's the daily. Then after they go down to the 4 hours. For 4 hours, they want to look at maybe a 5 days look back, and then they're going to calculate, 5 days moving average. 5 days moving average when converted to 4 hours, what should it be? All right, so it gets very complicated, right? So for me, I like to use 21 and 13. Okay, and how I use them is very simply, if price above both moving average, bullish. If the space between both moving averages is very wide, very bullish. Okay, very simple. I like to keep things simple. Okay, some people like to look at the 50, some people like to look at the 200. All right, I have no issues against that, but my question to them will always be, what is the premise, what is the basis behind using 250? Okay, there has to be a proper reasoning behind it. If your reason is just going to tell me that everybody else is looking at it, okay, yeah, well, I sort of accept the reason because the rest of the market is looking at it, but it just means that you're one of the sheep. All right, you're one of the follower, you're one of the herd. All right, you need to do things differently in order to be the 1%. You don't want to be the 99%. All right, so Bartholomew, I hope that answers your question. So with that, let's quickly go right into the chart. Okay, let's start off with Maria's request first. All right, let's look at the dollar ZAR. Okay, again, I like to start off with the monthly. Okay, so monthly, you have a very nice reversal over here. Right, you do a retracement from the low, swing high to swing low. Okay, no nice graphical levels. Okay, even though it's a nice reversal, no nice graphical levels. So I'm just going to ignore the monthly. All right, no nice graphical levels, not even near any key Fibonacci levels. I will just ignore it altogether. Okay, let's look at the weekly. Okay, on the weekly, market structure is very bearish, right? How do I know it's bearish? Because, price is making lower highs and lower lows, right? So price may make a lower high here and push down to make a lower low. So, and we can also see very clearly that price is basing over here, right? Price is sort of making a base over here in this area here. In close, it's easier to see, right? This entire area here right now, something like that, right? And I can do a retracement of the last swing high to low, and we can see the price is actually approaching the 61.8. So I'm going to leave the 61.8 there. There's no graphical level right now, but I'm thinking because of the fractal nature of markets, if we go down to the daily, we might see, okay, a Fibonacci level over there, right? I'm just going to put the weekly support at the last swing low here. Okay, and let's go down to the daily. Okay, again on the daily, nothing too nice in terms of graphical level. Okay, so for lack of a graphical level, I'll just put here as a resistance. This spike here, very weak level because it's just one spike, all right? But it's close enough to the 61.8. So let's just remember that. I'm just going to draw a box. This is on the daily. Okay, I see price doing a push up and then sort of a A, B, C pattern, a zigzag, and then another push up. So I can use Fibonacci extension. 0.1, 0.2, 0.3, very close to 61.8 over here. All right, very close to 61.8 retracement, very close to 61.8 extension. All right, but again, it's not at any graphical level, so I don't really like that as well. All right, but what we know is that price, okay, based on the weekly, price may push up to this resistance because it's a downtrend, and then price may pull back lower. Okay, so if price is going to come to this key resistance level, let's do a retracement from the low to where price would ideally end up over here. And we can see that the 23.6 is actually at a strong graphical level over here. Okay, 23.6 is here, support, but the nicer level for retracement is actually at 38.2, right? 38.2 seems like a cleaner support level, but I'm just going to put it there nonetheless to mark out all the levels. And now the weekly support is too far. Okay, let's go down to the 4-hour. So we have the daily resistance, daily support 23%, daily support 38.2%. Okay, and you can see a very clear zigzag right now on the 4-hour, up, down, right? So let's do a extension, 0.1, 0.2, 0.3, and you can see very nicely 100% Fibonacci extension lining up there. Okay, so you have 100% extension on the 4-hour. You have the daily 61.8 retracement. All right, sorry, you have the weekly 61.8 retracement. All right, and then you have this daily wick spike over here. Right, so you have a very key resistance level. Right, all you need to know is that right now price is going to push up to this level. Okay, so I will not take this trade. Okay, if price was actually closer to, if price was actually somewhere over here, all right, price was actually somewhere over here at this graphical overlap support, somewhere over here. All right, I would actually recommend that, hey, it looks like a good opportunity for a long, and just put a stop loss at where the daily 23.6 is. All right, however, price is too close to resistance, but it's not at resistance yet, and I don't know how the reaction is going to be like. And dollar ZAR is an exotic pair. This is really something that I just want to be careful about. So Maria, this is my view. These are the key levels that I have in place for you, right? But I will not take this trade. Okay, I hope that. Okay, I hope that that answers your question. Okay, you're saying the support and resistance values are a bit hard to see, right? Let me just make it bigger so you can take a quick snapshot, and then I will move on. Hey, is this big enough for you? Okay, so quite a bit of questions. Okay, so very quickly, let's move over to Bartholomew's request. Pound dollar, the cable. Okay, so pound dollar. Okay, so pound dollar, I have a prior analysis over here, bullish. Okay, bullish. Why? Because let's just redo this entire analysis again, shall we? Okay, so price at a pound dollar is on a resistance. Key long-term resistance over here on the monthly. Okay, so just eyeballing it, very key resistance. You don't have to worry about anything else. On the weekly, you can see, you can just adjust it. You can see that there is a reaction here. Really is a zone, right? And let's quickly go down to the daily. Okay, on the daily, there's a strong push up over here, right? You want to do a retracement from low to high. You can see that price actually sort of tapped the 78.6 level, right? Even the 88, right? So it tapped the 78.6 level and even the 88. Okay, so I just want to take the extreme. I'm going to take the 88 as a support. Okay, now in close, very interesting. In close, you see what is sort of a triple bottom, right? You have a very strong downtrend. Price makes one bottom, two bottom, three bottom. Okay, it is a triple bottom for me at least. All right, and if I were to do a retracement of this move high to low, you can see that there is a 50% resistance level here. Okay, so a resistance 50%. These are the levels that I see. So I have the daily resistance, daily support, and the long-term resistance. Let's go down to the 4 hours. Okay, so on the 4 hours, right, if you take trend line, something like that, right, you will see that, you know, price has broken out of this trend line, right? What I like to see is actually a trend line breakout and a pullback. Okay, when it does a pullback, I'm waiting for rejection and then I will go long, right? So I have a swing target over here, a very possible swing target over here, take profit. I will do a retracement. This is the 4 hour chart, right? I'll do a retracement of the last push, low to high, and you can see that the entry is actually at the 50% level, quite close to where the trend line breakout pullback level is. Okay, so this is a very possible entry level. Okay, a very possible entry level, right? And then of course, I will use this swing low as a possible stop loss. Okay, and this is just a trade waiting for it to happen. All right, so still overall bullish. All right, last but not least, you can actually look at indicators. All right, let's look at stochastics. Okay, stochastics is reacting at a high, right? So definitely some room for a drop. You can expect stochastics to drop. Let's look at the usual momentum indicator. Why I did not immediately go and look at a momentum indicator? Very simply because momentum indicators do not work in a sideways market. Look at it. If you are going in a sideways market, if you are going to be identifying, okay, buy and sell, and you're using momentum indicator, your account is going to get taken out really, really terribly badly, and it's going to hurt like hell. Okay, so momentum indicator in a sideways market, I'm thinking this could be a sideways market because it's roughly the same high, which is why I just ignored the momentum indicator right from the start and look at stochastics. But MACD is above zero still, so it's telling you that overall on the 4 hour, we're still within a very bullish configuration. Going back to the daily, right? Doesn't look pretty. We are actually below the MACD is actually below zero, bearish, right? But you're starting to see a crossover, so you can play a short bounce, a short-term bounce on the lower time frame. Okay, and okay, so that is pound dollar Bartholomew. I hope that answers your question. Again, I'm just going to go back down to the 4 hour to let you see the key levels. All right. Okay, and very quickly, okay, okay, in the interest of time, okay, let's just I'm going to try to combine some questions together. Let's look at pound yen. Okay, Rahimi's question. Let's look at pound yen. Going to clear all indicators. Now, one of you is actually asking, okay, how do I draw support and resistance as ranges or boxes? Okay, so it really depends, and if I can show how somebody scalps CFDs. Okay, so correct. I'm not a scalper, right? I will not proclaim that I know how to scalp. Okay, but what I can tell you is, right, I don't want to mislead you. Okay, I don't want to give you the wrong information and then you go end up scalping and then you're gonna be like, oh my gosh, this Isaac, you know, what a hoax, what a scammer. All right, so an example will be of a scalp, right? Will be, let's say you have a key level. Okay, so let's just say there is a key level right now. Okay, a scalp will probably take place on the 30 minutes, or probably let's just go down to the 5 minutes. Okay, so you have a very key level. Price has, let's say, hindsight, okay, price push all the way up, right? Price push all the way up, you do a retracement, low to high, right? You see that, you know, there is a 61.8 over here, right? Close to a graphical overlap, right? So depending on you, you may want to use this spike as a possible entry level. Okay, you might want to use this spike as a possible entry level. Okay, and then very simply, maybe all you have to do is your take profit 10 pips above, right? 10 pips above, let's just say 10 pips from 809. Okay, you have 10 pips above, it will be 890, something like that, right? Okay, and then after that, your stop loss very quickly 10 pips below kind of thing. Okay, so you have 790, something like, oh no, sorry. Okay, it's 609. Okay, no, wait, 709. Okay, something like that. So 10 pips above, 10 pips below. What is wrong? Okay, oh come on. Okay, so 10 pips above, 10 pips below, right? So an example is you zoom into this area, you see price actually tapped the graphical overlap, the entry and a key Fibonacci level. Of course, it will be the best if you have a Fibonacci confluence level, it all lines up together, right? Price tap, okay, it doesn't hit out your stop loss, okay, something like that, okay. Price doesn't take you at a stop loss immediately, it pushes upwards, all right, to very close to your take profit. So what people will do normally, if it's like 5 pips in profit already, they immediately move the stop loss to break even, okay. And then what happens is, you know, price will come back down, okay, take you out, right? Doesn't matter, this trade you're break even, okay. Ideally it's supposed to hit your take profit and you're out, in and out really fast. Okay, so that is an example of a scalp. All right, I hope that answers your question. All right, correct. Okay, so let's look at pound yen. Okay, let's start off with the monthly and let's try to incorporate drawing support resistance boxes. Okay, so pound yen, similar to pound dollar, very strong resistance over here, right? You can just draw a resistance level here. Okay, strong monthly resistance. This itself, if you want, it is already a zone, right? You can, how I identify zones, okay, is when there's a very strong push in the market, right? A very strong push goes up and then a very strong push all the way down, right? I look at the first candle that starts the push and then I draw a box around it. Okay, so this is a monthly. It doesn't really make sense to draw a support resistance box, but at the end of the day, you can see when price comes back to this support resistance area, it reacted and it went below again. Okay, so anyway, monthly resistance, let's go down to the weekly. All right, weekly, we can do a retracement from this low to high, and we have price testing the 23.6 support level. So you have a weekly support at this level. So monthly resistance is still intact, and it can act as the weekly resistance as well. Very strong, very intact. Okay, weekly resistance, weekly support. Let's go down to the daily. On the daily, market structure is making lower highs, lower lows. Okay, we can expect price to make a lower low, right? Connecting the dots, okay, drawing a trend line, right? You can see that, you know, hey, there's a descending trend line resistance, all right, and price is going down. Okay, so you can do a retracement from high to low, and you can see that price is reacting at the 61.8 retracement level right now. So you can draw another resistance level here. Okay, so bearish configuration, we are expecting, right, price to actually make a drop down. All right, we're expecting price to make a drop down. However, there is a real, okay, if this is a strong push down, there is a very real resistance zone in the middle that you can actually see. All right, so price, okay, may, over the course of the next few days, price may trick everybody, extend up, okay, hyper extend up to this trend line, all right, touch this trend line once more and then drop right back down. All right, so don't be fooled. Okay, and the 78.6 retracement falls in line in this zone right here. Look at that. Okay, so there is another possible resistance, two very possible resistance in this area here for me. Okay, monthly resistance is a bit too far, going to ignore it right now. Okay, now we have our zone on the daily. Let's go down to the 4 hours. Okay, 4 hour, we can actually tidy up this trend line. Okay, this trend line is a bit too far away. Let's remove it. Okay, this this zone, all right, we can actually tidy it up. All right, looking at this area here now, there is a strong drop. There's a smaller candle here. I like to use this candle, can extend it out. Okay, so you can see price actually came down and tested this zone, right? You can again draw, tidy up your trend line, make it a bit more accurate, and you can do a retracement high. Okay, where am I picking? High to low, and look at that, price tapped the 78.6, extended a bit into the trend line, right? And it's also inside the zone, the resistance zone, and now you can expect it to drop. Okay, I immediately know that, you know, price is going to drop where I have a few levels already. Okay, so sorry, I just want to bring this to the back. Okay, this is a possible, this can be my possible take profit too. Somewhere in the middle can be my possible take profit 1, 61 point retracement. Okay, and then my final take profit can be at a negative 27.20. Okay, so unfortunately price seems to have already left the entry. Okay, if you want to try to get in, right, you may want to get in on a trend line breakout pullback. Okay, it may enter somewhere over here again. It might come back, right? Might not. Okay, so I would actually have my entry somewhere over here, and then after that I'll have my stop loss just outside of this zone, just outside, okay, of the resistance zone. And this works out to be a very, very nice trade with a very beautiful risk reward. Okay, let me just zoom out to the 4 hours. You can start seeing all the levels very clearly. I'm just going to remove the Fibonacci level. Okay, and let's look at stochastics. Stochastics is reversing from resistance, and okay, I want to look at the longer term momentum. So we just crossed below the 0, all right, and you're starting to see the indicator start to open wider. Okay, so this is just a very quick, simple template that I use. All right, so I'm so sorry, guys. Again, I've overrun, right? In the interest of time, I'm sorry, Travis. Okay, I will not be able to analyze Kiwi yen and dollar Mexican. All right, so maybe the next time you can ask me first, and then I'll straight away analyze it for you when we get to the analysis portion. All right, thank you so much for understanding, Travis. I appreciate it. Okay, so with that, just a quick summary. Understand that the main story, the main headline for the day is really the stock earnings season over in the US. And for the rest of this week, we are leaning more towards a risk on sentiment. Okay, so with that, I wish you guys all the best. All right, thanks a lot, Andrew. Right, wish you guys all the best. Trade safe, stay safe. Okay, and I'll catch you guys the next week again. Take care, everyone. All right, so yeah, before I forget, before I go, right, if you have any feedback, okay, please email support@fpmarkets.com. If you have any questions, you can email that email as well. All our other webinars, all right, go to fpmarkets.com/trading-webinars/ you can find it over there. Okay, so you're welcome, Travis, you're welcome, Pravin. Right, have a great day ahead, guys. Catch you guys again. Goodbye.